Hi everyone, this is CA Hardik Thakkar, and in this video we are going to understand the different components of salary. Okay, salary income, if you have seen in the previous video, is applicable only when there is an employer-employee relationship and the money is received on the ordinary course of the employment, right? It is taxable on accrual basis or receipt basis, whichever happens earlier. Now let us understand that what are the components in which you can receive salary income on which there will be tax implications. Okay, the first component of salary is called basic salary, which is your basic decided amount of salary. Okay, then the amount that you can receive in the form of salary can be segregated into three parts. Okay, the first amount is called as allowances. Now allowances mean certain fixed amount that is paid by employer to an employee every month to meet certain expenses. Allowances simply mean fixed monetary compensation that is paid by the employer to the employee for meeting certain expenses. Now what do you mean by certain expenses? It can be to beat the inflation in the country, to compensate for the increase in cost of living, to compensate for the rent that is paid by the employee, to compensate for the traveling or commuting or for the education of the children. So for all of these purposes, a separate amount can be paid over and above basic salary to the employee every month. That is called as allowances. Some of the name of allowances are, most famous ones are dearness allowances, then we have house rent allowance, children education allowance, children hostel allowance, commuting allowance, traveling allowance, medical allowance, food allowances, uniform allowances, etc. These allowances are also further categorized into a couple of 2-3 different ways based on their taxability in old regime and new regime. Some of the allowances are exempt. Some of the allowances are exempt to certain extent under both old and new regime. Some of the allowances are exempt to a certain extent only under old regime, right? Certain allowances are fully taxable, so on and so forth. We will cover allowances in a greater detail in a separate dedicated video, but this is the overview that I wanted everyone to understand. So first part of the salary after basic salary is allowances, where fixed amount is paid every month to meet expenses. Second thing that we can have is perquisites. Perquisites means here expressly money is not being paid by the employer, but the monetary benefits are provided by employer to the employee. Okay, so unlike allowances, there will be no flow of money from employer to employee, but the benefit that employer is giving to the employee is worth monetary benefits. Okay, for example, ESOPs given, employee stock options given by employer, right? They gave me one stock at 100 rupees and over the course of a couple of years it increased to 300, 400 rupees. So the profit that I make on those stock options are called ESOPs, which is covered under perquisites. If my employer pays me 50,000 rupees per month for my rental allowances, that is called house rent allowance. But if employer, instead of paying me money, allows me to stay in the quarters or the guest house of the employer, for which he is not charging me anything, in that case that will come under perquisites. If employer pays me fixed amount every month for traveling or commuting, that is a commuting allowance. But if employer gives me car or a bike at company's expense to be used for commuting purpose, that is called as perquisites. So when employer pays you money into your account every month fixed amount, that is an allowance. However, if the similar kind of monetary benefits are given but directly money is not given, that will be termed as perquisites, like rent-free accommodation, providing car or bike, providing rent-free stay, etc., providing furniture, okay, all those things without charging money or charging lesser money, that is called as perquisites. Okay, and the third thing that an employee can receive, which will come under the head salary, is the retirement benefits. Okay, so there are three things that are received. Okay, first is you receive salary on an ongoing basis every month. Most commonly, sometimes you receive monetary benefits which are called perquisites, and there are some designated amounts that an employee is eligible to receive on his or her retirement. Okay, to name a few, some of the retirement benefits are provident fund, Okay, then again provident fund will be of different types like statutory provident fund, public provident fund, recognized, unrecognized provident fund, etc. Then we will have pension. Okay, it is an amount that it can be paid lump sum also, or it can be paid every month post retirement. Okay, so that is pension. Then there is leave encashment. Okay, if an employee has accumulated leave over the period of employment at the time of retirement, now he is going on a permanent leave from the company. So what will he do with the unused or accumulated leaves? Income tax has a provision that you can encash those leaves and you can take cash against that. Okay, so that is the leave encashment that can be received at the time of retirement. And gratuity. Okay, gratuity can be received. The gratuity is a way of saying thank you by the employer that you served us for 20, 25, 30 long years of your life. So as a appreciation, as a token of appreciation, we would like to give you this amount, which is called gratuity. So pension, provident fund, leave encashment, gratuity, all these are the retirement benefits that can be received by an employee. Okay, so together when we consider everything, we will get your total taxable income under salary. From the gross taxable salary, there are two deductions that are allowed by the income tax, which you can reduce from your salary income, and the net taxable salary that you receive after that is your final taxable amount. Okay, what are those two deductions? First deduction is standard deduction of rupees 50,000. Okay, this 50,000 rupees of deduction is applicable for previous year 23-24. Starting previous year 24-25, the standard deduction has been increased from 50,000 to 75,000 rupees, but it is applicable from 24-25 onwards. For 22-23, standard deduction is rupees 50,000. Right? And another one more deduction is professional tax. Whatever professional tax is deducted by the employer, a total of that, you can see the salary slip of a person. In that, in every salary slip you will see a deduction of typically 150 to 200 rupees every month on account of professional tax. So that professional tax can be allowed as deduction, and the salary that remains after considering these two deductions is your net taxable salary, on which you will pay tax as per the slab rate that are given in income tax. Okay, one thing you need to notice that if you are following by default or new regime of taxation, there will be no benefit of professional tax and you are allowed to claim only standard deduction as an exemption. Okay, but if you are following optional system or old regime of taxation, you are eligible for the deduction of professional tax. So this is how the formula, this is how the format of income from salary looks like, and these are the three terms that are that you need to understand if you want to understand income from salaries better. I hope you understood the meaning of these terms, and I hope you are ready to understand the practical side of it. So thank you so much for your time and attention. Further concepts will be discussed in the upcoming videos. Thank you.